10 interviews in the oil and gas industry, presented to you by EPIUS and EnergyAsia.
Can you tell us something about your company? What's the background and what area of the energy business you specialize in?
We started this business in 1990, and originally that was in the upstream area, mainly in the offshore oil and gas sector. And progressively we've moved into the onshore oil and gas business and into the downstream sector also. But most of our time is spent analysing the business, mainly the supply and service activities that happen within the industry. So fundamentally, we know about the pyramid of companies that support the oil and gas industry.
Where is your company focusing most of its business these days? Upstream in the Middle East, the North Sea, or new parts of the world?
Well, to a great extent, it depends upon where our customers want us to be. But, for example, last year, our largest source of revenues was Russia, because of the high level of commercial activity that was going on in that part of the world. So that was our largest source of revenues. This year we have a lot of activity going on in the Middle East. But overall, perhaps 70% of our revenues comes from around the world and 30% from activities within the UK.
What about Asia, John? Is Asia an important area of growth for your company?
Very much so. Over the last few years we've been working extensively for clients right across Asia, particularly, interestingly enough, in China, looking at development or financial development of operations in China, where we have assisted companies in doing deals, buying and selling of oil and gas service activities.
Who would be buying into what in China?
Well, obviously the Chinese industry is developing. China has got some tremendous challenges in actually obtaining sufficient supplies of energy from across the world, and of course it's a very large player in terms of the sheer amount of drilling activity that goes on within the country, and that has meant that companies have developed, and those companies are seeking to work on a more international basis.
So it is Chinese companies buying companies within China or from outside?
Both situations.
Right.
And then, of course, we also have been working for clients in Singapore and in Hong Kong, and at the extremes of the region in Australia.
We're having a credit crisis at the moment. How is that affecting M&A activity in the oil patch?
Well, the real problem has been that the credit market as such virtually doesn't exist. So activity has really been turned down. And we were expecting that situation to occur, from going from an overheated environment through to a situation of difficulties. What has been unusual is the amount of time that's taken to happen. What we found is that interest has started to grow again within the past few weeks. And at the end of the day, this is a very, very big business. And the process of mergers and acquisitions and rationalizations will continue. I think it's important to remember that many of the major oil and gas service companies have made a great deal of money in the last 2 years. And so they are now looking at situations where they can acquire more of activity across the sector.
And of course, with oil at $45 today, suddenly things have become more affordable.
Yes, indeed. That's a very, very important factor.
And if you had made a lot of money and you didn't blow it away, you're holding on to a lot of cash that you can deploy at this moment.
That's correct, and that's a situation that exists right the way across the entire oil and gas industry, from the oil majors who are now sitting on cash mountains down to some smaller service and supply companies who have done very well. But the critical point is, as you've said, have they managed that money correctly over the period? So are they now in a position to take advantage of cyclical lows in the business?
How worried should we be with the oil supplies in the next, say, 3 to 5 years? The IEA just came out with a report last month, where they talk about depletion of oil fields at more than 6% per year. How worried should we be?
Well, 2 years ago when I was last at this event, I said that there was going to be a very large increase in oil prices, and then there was going to be incredible price volatility, and the issue that may lie ahead is a credit crisis. And indeed, all of these things have happened. We have been looking at this situation for many years now, and over those years we've been increasingly convinced that a major problem is brewing in shortages of oil supplies, and this is because of oil depletion. You said the IEA are looking at about a 6% depletion per annum. We have always used 4%. Now the IEA 6% is a very new figure. They have been gradually moving towards the position that we have had. But if you go even more modest than that, say 4%. Now at 4%, well, and we're producing about 85 million barrels per day. Let's say about 3.5 million barrels per day needs finding from somewhere and bringing into production just to take into account the oil that is depleting. Saudi Arabia produces about 10.5 million barrels, so about every 3.5 years you need to find and bring into production a new Saudi Arabia. That's a little bit of a problem.
That exactly is what the IEA report said. We need to find new Saudi Arabias like 4 new Saudi Arabias between now and 2030.
I think that might be an underestimate. If you look at this sort of situation in the North Sea, their production has been depleting by over 11% per annum. So, yes, there's a very difficult situation developing across the world. Now, at the moment, there are plentiful oil supplies, and we forecast some years ago that at this time we would be living through a period of plentiful oil supplies.
Short term.
Short term. And so $147 per barrel was not justifiable. And again, what is happening at the moment, oil prices dipping below $50 a barrel, is not sensible. And that, of course, has been caused by the credit crunch, nothing to do with the oil industry. But it doesn't take away the fact that we are going to move into very difficult times. And the big problem at present is that people might think that low oil prices means they should not invest. And if they do not invest, then the problem is going to get worse in the years ahead.
2 years ago, you gave good advice to people who listen to you. What would you tell them now to expect 2 years from now?
2 years from now, the situation could be fairly similar. The difficulty or the interesting position occurs from about 3 years to 5 years from now. So if we are going to see a situation of increasing oil prices, if we're going to see a situation of increased depletion of oil reserves across the world, then now could be the time to be starting to make long-term investments. The fundamental fact of life is that oil and gas is a long-term business. It's not a short-term business, and people must accumulate financial reserves during the good times and be prepared to invest those financial reserves sensibly during the down times, and we are now in a downtime. So in other words, now could be a very good time to start looking at investing in this sector.
Understood. On that note, John, thank you so much for these comments.
Thank you.